Hey YouTube, it's March 23rd, 2021. Let's take a look at what's going on in the market. There is some movement with spot price this morning. We'll get to it when we return. Hey everybody, and welcome back. So let's start out by getting to spot price and looking at gold first. Okay, I see gold spot price right now, $1,736. That is down $12.10 or 0.7%. Of course, I did notice that about a $10 to $15 drop off in spot occurred at 9:30 this morning, right when the New York Stock Exchange opened. And that same charting looks to be taking place over with silver. So now looking at silver, I see spot at $25.34, down 47 cents since the market opened. That is down 1.82%, or a little bit more than twice what gold is down so far this morning. So if you're looking for any deals on silver, which deals are hard to find, obviously, with premiums right now, but we are seeing about a 2% spot price drop on the day. All right, so lastly, let's take a look at platinum, which has been seeing some pretty good action lately. Platinum at $1,190.40, so it is down slightly by $4.10 or 0.35%. All right, so now I want to talk about an article that I read this morning from the Daily FX. All right, and this article is titled "Silver and Gold Prices Fall with Chinese Stocks as the U.S. Dollar Gains. Where to next?" Okay, we've been seeing a lot of chop, right? A lot of kind of riding the line with gold and silver lately. A couple of little dips down towards 1700 in gold, but mostly hanging in that range between 1700 and 1750. With silver, it's a little bit different. We did see silver in the high 24s a little earlier. Then it did increase again up into the $26 range and is now settled once more, kind of in between 25 and 26. So let's get to the article. Silver and gold prices started off the week on a sour note, with most losses occurring during Monday's Asia-Pacific session. The U.S. dollar gained as the ousting of Turkey's central bank chief seemed to briefly inspire risk aversion. At the same time, the flight to safety dynamic boosted demand for treasuries, boosting prices and taking down yields with them. That may have cooled downside on the XAU-USD and the XAG-USD potential. So precious metals like silver and gold are non-yielding assets, which makes them inherently sensitive to the shifting tides of bond yields and the strength of the U.S. dollar. This is perhaps why both precious metals were slightly lower during Tuesday's APAC session, as the greenback appreciated amid risk aversion. Chinese equities led declines as Credit Suisse cut the nation's stock market to underweight from over. All right, so once more, these bond yields, these treasury yields, are having an impact on gold and silver's ability to climb out of their current ranges. I'm hoping that we'll start to see those yields obviously come down somewhat, which will free up gold and silver to run. However, I guess we could look on the bright side here, and it's just keeping prices down a little bit longer. Obviously, gold and silver are pretty heavily manipulated by the futures market. We'll talk about that here in a second, but let's continue on. So meanwhile, Germany's Chancellor Angela Merkel announced that the country will impose a drastic 5-day lockdown over the Easter holiday amid a worsening COVID situation. Treasury traders may be positioning themselves ahead of 2-year, 5-year, and 7-year bond auctions throughout the week, compounding recent gains in prices. Aside from that, gold and silver prices will also be eyeing testimony from Federal Reserve Chair Jerome Powell and Treasury Secretary Janet Yellen before the House Financial Services Committee during the U.S. session ahead. The former is expected to talk about monetary policy and may reiterate sanguine views about the bond market that may risk slowing gains in bond prices. All right, so let's move to the silver technical analysis. So silver appears to be trading within a neutral symmetrical triangle chart pattern. The direction of the breakout could determine the next key move from XAG-USD. It should be noted that a drop under the floor of the triangle still leaves the key $24.06 to $24.88 support zone to clear thereafter in order to resume January's top. Otherwise, a push above the ceiling exposes the February high. All right, so moving now to gold's technical analysis. Meanwhile, gold is still trading within a bullish falling wedge chart pattern. Prices are testing falling resistance. A turn lower from here could open the door to facing the $1,658 to $1,678 support zone on the daily chart. Otherwise, a break above the ceiling of the triangle would place the focus on the 50-day simple moving average, or SMA. Okay, all right, so once more, let's talk about the impact of bond yields on gold and silver. So once more, a lot of big money, right? The whales out there that can move a lot of money in and out into different asset classes. They're looking for those safe harbors. And right now they're seeing that gold and silver are being artificially manipulated and held down by these bond yields. So a lot of money is now moving into the treasuries, right, in order to capitalize on the guarantee that is by the federal governments that issue those bonds, like the United States federal government, that they will receive their face value back at a said period of time, plus interest each year. I think these are terrible investments, honestly, terrible investments. We do know that the inflation in the economy right now is around about 7%, not the 2 to 3% that the Fed likes to talk about. Okay, if you look at the price of food, you look at the price of energy, you look at the price of lumber, basic materials, commodities, copper, all of it is running higher, okay? And that is that inflation we're talking about. Plus, inflation right now is very heavy in assets, okay? Bitcoin all-time highs, real estate all-time highs, gold hit an all-time high last year. So do not be fooled by what the government is telling you when it comes to inflation. Inflation is live and well in the market, and the economy is a little bit more overheated than the government would also like to let you know, okay? So we're seeing a combination of cheap money, inflation, and an overheated stock market, okay? So very great year in the stock market, 2020 was, when you take out the obviously big decline in March, but a very bad year for Main Street. So economics right now, turbulent to say the least. And that's why I'm sticking to my gold and silver, because one, I don't want to lock up fiat currency in a bond or some other treasury security for years upon years, earning far less than what I know inflation is to be. Secondly, we've got some hot asset classes out there like cryptocurrency, definitely getting involved in that, trying to make some profits during the crypto bull run, while also continuing and staying with my savings and stacking precious metals like around about 2 to 5 ounces of silver each week, and of course a minimum of a quarter ounce of gold each month, gold being the metal that I'm most focused on. So lastly, let's talk about, so we talked about CPI and inflation. We talked about interest rates. Now I want to talk about the contracts on the market, okay? So gold and silver, they can be settled with futures contracts on the exchanges that are all settled in cash, right? All settled in cash. So essentially, when a lot of demand comes for gold and silver, like we saw with silver about a month back, all the futures market has to do is just dump more contracts onto the market, which will never be settled in physical silver, and therefore they can settle in cash. Those contracts are unlimited. They have nothing to do with the actual physical silver and gold that's available for delivery. So that is the manipulation I'm talking about. So for those of you that think you can just go out to your coin shops and clear them out of all their physical products, and that's actually going to drive the valuation, no, you're not. What you're going to see is an increase in premiums maybe, as dealers scramble to find what limited inventory they can, but you're never going to change the spot price, and it doesn't matter how manipulated it is. We honestly can't change it because we don't control the contracts. So we have to live within this paradigm, right? And in order to make the most of that, I'm just going to continue to stack as much as I can until the great currency reset, when we will have freedom from these banks, as well as invest in those lucrative stocks that I see that are going to continue to promote cash flow for me so that I can buy more gold and silver and those cryptocurrencies, which I'm hoping to ride this bull market up on. And then I'll get out at the right time, maybe short crypto when it starts to come back down. I'm expecting that to happen around the fall of this year, and take those profits and convert that over into more gold and silver. So that's what I'm looking at. Let me know what you're seeing in the market. Let me know your thoughts about the manipulation and the current spot prices of gold and silver. Until then, my friends, thanks for tuning in. Keep stacking, and I'll see you soon on a silver unboxing video.